Well, welcome to the Twomey Stock Market Report. I'm James Twomey, and today is Tuesday, December 13th, 2022. Well, the markets are rocking and rolling, and if you've got my alert this morning, we gave you some instructions, gave you some insight. We did see some wonderful numbers. The markets on the CPI, when I say wonderful, the market interpreted them as wonderful, and the futures were way up. And I let subscribers know, don't buy just yet. We do probably want to add. The cat's kind of out of the bag, with those futures. But with the Fed coming up, we wanted to wait and see before we either added or took new positions. And sure enough, we saw where the market went today. That euphoria melted away. So market update. For today, we're going to go over a couple of quick positions. We're going to show you what's changed dramatically since yesterday's update. And again, you go to the number 2, mestocks.com. The market update's right there on the front page. But let's get right to this. So add sell positions. We're going to look at the daily charts mostly today. And what's next? We can also touch upon the sector. Overall, what's our recession? Inverted yield curve, 2 negative GDP, PMI below 50, expanding unemployment. Went into that, in our market newsletters and ad nauseum the other couple of video sessions. But, today the CPI came out. It was 0.1% from the previous month up, and it was up to 7.1% from a year ago. But the estimates were looking for a 0.3% increase month over month and settling at 7.3. So initially, what's happening? We talked about this yesterday. We still have inflation. 7% inflation is still high. It's still going to affect the markets, borrowing for companies, and supply costs, etc. The economy is slowing with qualitative tightening and the rate increases, which are going to continue. But what the market is, the first step of the victory, we mentioned in our newsletter, the first step is, can inflation level, right? So that month to month, we're not seeing, more increases. So, we're starting to get there. That's going to help stabilize the markets. If the Fed starts feeling like we've done our work and we're still maintaining some type of employment, and they go to 0.5 tomorrow and then 0.25, let's say in February, and March or April, the market's going to start saying, hey, the Fed's done its job. Every time the Fed stops raising rates or curtails them, the market tends to run ahead, and we've got the midterm elections, etc. So for the update, let's take a look technically at some of what we're looking at. I'm going to go to the diamonds, which is our proxy for the Dow. Talked about yesterday, we had that upswing for the red lines that got broken the last couple of weeks, and now we've got a new purple uptrend forming, right? And that we bounced off of that. We're getting near a sell signal, and if we look at overall this purple line from year to year, we've been certainly in a downtrend year to year, right? And every time we get up to these highs up near the trend line, we broke and come down and we form lower lows. Well, we got up above here in the bear market summer rally. The market gave it all up, and even with the lower lows, tested the lower lows again. And now we're up here toying again, a little bit up here. We've broken the last high that we had, 7 days ago, and it's a big red candle, though, because we had the sell-off. Yeah, the market's not convinced. Of course, we're year-end and a lot of things, but short-term, we've abated two things, right? We're going to start at the bottom. Stochastics. We've now broken. This is our short-term tracking indicator. The green is crossed above the red. It's not, we say when we start getting around 50 to 75, we want to start taking that as a positive that the market has got a chance to advance. These are our short-term oscillators. They move up and down very rapidly. We don't trade off of it. But so right now it's at 52. So we've got our antenna up. Market does have a chance to, this is the diamonds, the industrials, which has been the strongest. We look at the MACD, we see this slope is still negative, but it's positive. The green is trying to make an inflection point and cross back up above the red. So that's telling us, whoa, be careful. we're not convinced yet. The MACD is a moving average. It's a smoother. It takes longer durations into, and this cross doesn't happen as often. So we pay attention. That hasn't crossed green above red. We need that to happen to say, yeah, all safe to go back in. We look up top here. Good news is the 9 and the 14 EMA, which is kind of our initial sell signal. We're looking at that they're running in parallel, and we bounced off of that. We came down to the 20 EMA and bounced off of that, and we bounced off of the new lower trend track line. So relative strength index, it's up at 59, so it's getting back into oversold territory. We were in the mid 50s, oversold, it's like mid 65. We pay attention to really oversold territory is 70. So, we did reprieve that for the last 5 days, but now it's starting to get back into that, upper limit, nearing the upper limit. So we've got some room to go. If we look at the weekly chart, just to give you, I want to give you a quick synopsis here. See how the short-term trend track line for 2022 is from the weekly down, 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 lower lows, lower lows. The upper trend line, however, has been broken, right? Much like the daily, but a little bit more prominent. And we've come up. And that is a good sign, because as the gap, I'll just draw it real quick here, as the gap increases, this is weekly, if it increases, we really can't touch 3 lines here. So that 3 highs, so we got to bring it down kind of lower. But with that said, in order for that gap to widen, which it is, that's a good sign that tells us there's pressure weekly that the prices want to advance. Will it maintain? We don't know, but let's take a look at a possibility that we've got some positivity this early in the week, right? We look at the 120. The 120 breaks the trading day up into 5 segments. Look at this morning. We gapped up, closed last night, and then we gap up this morning, but we quickly gave it up. So 1, 2, 3, 4 trading days in 100, when we break up the day into 120-minute bars, right? So what we look for here, we look for, I don't know, let me just, I only go back like, a month and a half, but I look at this and I say, all right, we'll pick this one. There's a high. It starts to fall back. We go to a low, and I look, as we go back up on these shorter trend marks, are we eclipsing this last high? Yes, it did. And then it comes down, but it eclipsed the last low. That's, we talked about over the weekend. That's nervous sector there, because that's telling us, wait a minute, a lot of volatility. It's going to a lower low. So now we're saying, look, we got to a high, we got to another high, and it came down, but it didn't break the low. And now we broke those highs, and we're coming back down, and hopefully it'll be repelled around some of our technical indicators, the 50 EMA, the 9, the 14, what have you. So that's a little bit promising that we've got more of an upward slope on this shorter term. And if that continues, that tells me, short term, we've got a chance to the year end to get back into more of a bullish position. That's the one. We've been somewhat bullish. We're not, we're not 100% invested, but we're there. Just want to give you that as a snapshot. Let's go to the SPYs real quick. There's not much difference there. The SPY, the S&P proxy we use, same difference. Did get up to that last high we did, barely broke it, and then repelled it. The MACD's the stochastics moved up. We're 55. MACD is almost cross positive. So yeah, we got some good movement today, but again, a negative downdraft the remainder of the day. We did get our buy sell signal abated for now. RSI is now 56. So more to come. I expect volatility with the Fed tomorrow. So that's why we're holding off. If we don't buy at the bottom, we don't sell to the top. We're long. Our longs have been under pressure, so we wanted to kind of just ride this out. We've got our stops in place. If tomorrow the Fed comes out and all of a sudden, there's going to be tremendous volatility between 1 and 3 o'clock. If we get stopped out, we can always get back in, maybe higher, maybe lower. But we're at this stage, capital preservation, because towards the year end, it should melt up, but we're not in the prediction business. If we look at the XLK, which is our proxy for the QQQs, we did break the last high. We did break the 200. This is very important because we've had a real struggle with that. We're starting to get a nice gap above our 9 and 14 and 20. We saw that with the SPY last week. We became very bullish in that sector, and then we lost that bullishness, if you will. So we're looking for this. The MACD here is at 62. I mean, stochastic green crossed above the red, and it's at 62. The MACD's ready to make a cross. Obviously, what's happened is a lot of money's coming into the lower beat-up sector, figuring that we're coming out of the raising of rates, and those companies may do, those growth companies may now have some breathing room because they are not really making money. They're just on the belief that they'll make money in the future, right? So if we look at our sector fund, a couple of things, we usually look at the 1 month and then we compare it to the year to see what's going on here, right? Energy had been up and now it's at the bottom. It's still, positive for the year, but, on the 1 month sort, it's at the bottom. And up top, utilities, healthcare, consumer, real estate, all very defensive plays. If we look at shorter term, the 5-day, what's fairly high? Real estate. And we're going to look at that real quick. Industrials, information. No surprise, IT is making a run back. That's the high-tech sectors, right? Energy is trying to make a little bit of a bump here. Energy, we would expect a little bit of bump if you've got inflation, right? Okay, utilities, very interesting. Utilities, yields are coming down. As yields come down, utilities become favorable because they're dividend payers, and they can pay usually better than a short-term, treasury. Looking at the TLT, which we are long, we've been long for some time, and also the 200% UBT, we could see that had a nice run today and then also pulled back. But we're back above the 9, back above the 15, back above the 20, back above the 50. We're back in that upward trend. We kind of played this for a bounce. It got repelled at the 0.618 Fibonacci. We're not real big Fibonacci guys, but, it got repelled there. So we want to be careful. And then, it's making a run back up. We'll see if it can make it. We'd like to see it make it. Let's see. Let's redraw this real quick one more time because we're going to look at the Fibonacci. This is a retrace from the recent low. And this high was back here. So let's see. I'm going to redraw it. Thank you for your patience. All right, here we go. Right align it. And there we go. Yeah, 0.5 between 0.5 and 0.6. Yeah, we got to get above that 0.618 to see it, continue a nice, other than a bounce. The good news is a bounce that gets into the 0.65 above 0.5 tends to have some staying power and wants to go 1-to-1. That would put us back up here. And that was back in, I was looking for that date while we were redrawing, the August bear market summer rally. Okay, that's a target. We're not in the prediction business. We're right now we're still long. We're not adding to this yet. We did, I've been adding every time it comes down below the 9, and that was once here. We had a little bit the other day, but we really haven't had a lot of times to really add to this position safely, right? So, but we're still long on that one as well. I want to look at utilities. Utilities, I've been long, but I didn't recommend to subscribers, and I wish it did now. Actually, it's come up quite a bit, and now this is above the 0.618 from the low to the last summer high. And look at this. We've kind of had a nice little rebound. That's telling us, again, the yield's coming down, utilities are coming back in favor. REITs, SCHH is the one we use with Schwab. There's probably better ones out there, but this one I tend to have a little bit more experience with, on the way it moves, and that has come back. And look at that. We were looking at a sell signal, at the end of last week, and we've repelled above that, and RSI is now up into 58. A lot of people call this the fool's trade, and it may be, but we're not. We're gonna play the bounce, and the bounce has gone a lot longer than we anticipated, and we got in way back here. So it's good. We've got two trading positions there. Look at here. See here. I'm talking about the stochastic. Now the green is at 62. The green of here in the MACD still has not crossed above the red from this downdraft the last 1, 2, 3, 4, 5, 6 days, and now we're trying to move back up. We still haven't hit the last high there, so we're not out of the woods, but it's certainly we've got a lot to tell. So tomorrow, what are we going to do tomorrow? Well, I would say this: you want to stay with let's take a look at one more thing. USO, U.S. United States Oil, and that is starting to make a run. If we look at the 120-minute chart, that has what we would call, I like to call these a mouse hunt. And, I would say this is a good entry because on the 120-minute, which is a smaller, softer chart, smaller chart time ways, we get a cross above the 14. We've got the MACD and stochastics up in the 87s. MACD is cross positive. All these things is telling us one buy. So if we go in, we put the buy, we buy here, and it's very volatile. You're going to put a stop here at somewhere at 64, and if you get in tomorrow at 65 and a half, you got 1.5 point trade. A little more than we like to see, but it's a good risk reward. Will it get there? I don't know. I don't know. We followed the oil trade a lot. It's happened to work out pretty good for us. The sector table, it's way at the bottom, right? Look at here, energy. It's coming off the mat, but it's the 20-day minus, in red down at the bottom. There's a lot going on with the trade, right? The sector right now, and it's a difficult trade. It really is. So we're looking at that. We were in the U.S. natural gas. We got stopped out of that, and then we sold at a negative, real bad trade. And look at that, we're well back up to where we got our original buy signal. So, hey, something's going on with energy. Anyway, so tomorrow, what's the game plan for tomorrow? I want you to take a look. We're going to wait out the Fed. I know, if you get in and it's really low tomorrow, let's say you wake up and the futures are off 300. I don't think they will be, but you never know. I would take a small starter position in some of these. And if the Fed comes out and the market gyrates and you end up flat or, down a couple hundred points, I think that's a good place to be. At the end of the day, if we come in and the market is negative, but all your technicals that we went over just now look positive, I would add to some of your positions or take a starter position if you're not in yet, and then just make your stops tight. We're going to melt up till the end of the year, I hope, but hope is not a good trading strategy. So stay abreast. What do I mean by that? You got to go to the number 2, mestocks.com, get our updated market reports on the front of the webpage. It's right up there. And then also, you can subscribe and you can get our market report. Comes out every week with a lot more detail than we discuss here. It's hard to get everything out in 10 to 20 minutes, but we try to give you a little bit of a snapshot. We also have our trade tracker. We alert you real time with our trades. Nothing wrong with that. Hey, you get an alert, you make the trade, put your stop in, and then that's it. You go back to what you're doing. Let us worry about the market. I'm James Twomey. Today is Tuesday, the 13th of December. Have a great trading day tomorrow.